Hello, traders, and happy Friday. It's 8 a.m. Chicago time on the 31st of January, 2020. January is behind us, folks. It's almost done. Hopefully, you've got great weekend plans ahead. Today, we're at episode 1683. Hopefully, the sound is good for you. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Yesterday was quite remarkable in the U.S. indices as we just exploded to the upside. And this morning, we've pulled back a little bit. We've pulled back a little bit, so showing a slight drop in the Dow. We've got it being down 138 points. The Dow trading at 28,653, or down almost a half a percent. The Russell's down almost a half a percent. It's 7 points lower from settlement. The S&P's down 0.38%. Or 12 and a half points. The leaders today, crude oil is just teetering on unchanged, up 4 cents. The 10-year notes are up two large ticks. The Bund is up 13 ticks. The bonds are up 5 ticks. So overall, the allocation to safety here is not really dramatic. There is a little bit of money being pulled out from the risk assets, but nothing very dramatic. The Nasdaq's down 25.25 points following incredible earnings yesterday from Amazon at 3:03 my time. Actually, right at the cash close, Amazon announced that its earnings per share for Q4, this is the Christmas shopping season, the earnings per share came in at $6.47. Wow. The estimate's $4.11. Revenue, $87.4 billion versus 86.1, propelling Amazon into the trillion-dollar market cap. Just incredible. It's just amazing that a company can be that big, but here we are. So that's where we stand this morning. Positive news. Now, what led to this crazy rally yesterday? Really, it's very ironic. It's very ironic that the CDC confirmed first human-to-human transmission right here in Chicago. Um, in Chicago, and then the WHO, the World Health Organization, says that the situation report on the coronavirus is stating that the coronavirus is a public health emergency. So first they say it's an emergency. We see the market pop higher and then drop lower because of that, and then the CDC also says that it is not recommending any restrictions on travel or trade, and then the market just blasts off, takes off to the upside, and brings us back into balance over the last couple of days. So very interesting stuff going on. In terms of the economic calendar, there's a lot going on overnight. I'm not going to go over that. I'm actually going to change the format for the Trader Bite a little bit. I'm going to reduce it to about 10 minutes, if possible, even less, maybe even 5 minutes. I'm not going to spend much time on the review. I'm simply going to just dive into what's expected. I'm also not going to talk about anything that's happened in the calendar. You have your own calendar. I'm going to talk about what's coming and what to pay attention to, and that's it, just as a way to be prepared. So for today, at about 9:42 Eastern, the subscribers to the Chicago PMI figure come out, get the number at 48 and a half. That could be a mover. It comes out to the public at 9:45. Michigan consumer expectations final, which isn't really a mover, at 10 o'clock, expecting 88.3 and 2.5% on inflation. And then that wraps it up. At 10 o'clock, we've got everything out of the way, and then we have the Brexit deadline today at 6 p.m. Eastern, which is 11 o'clock in London, the Brexit deadline comes along. The UK is about to leave the European Union in what has been a 4-year long divorce, ugly divorce that's finally coming to an end here. So that's where we stand. I'm going to review for one last time. I'm going to review what happened yesterday. The reason I was doing these reviews is to go over, the reasons are for transparency, but also to go over what went right, what went wrong, and carrying that information forward. Yesterday, I talked about two main scenarios. One is a drop into 31 and potentially 26 after a push higher. So I was looking for a push higher to sell against, looking for around 32.60. So 32.60 down into 31 and 26, 60, 31, 26. Okay. On the opposite side, on the initiative side, I was looking for a drop into 39 or so, and I was looking for a push into 70. Here's what actually happened. I don't even know if I can get it. Yeah, it's tough to get it on one screen here. Let's remove the stock zone areas. Here's what actually happened. It pushed to 64 right off the open. We had an open drive, responsive buying, left a little bit of space, about 5 points to the prior day's low, and then it rotated right back to 41, missing my target completely, and then it fell back in the middle, and it seemed to me like the market was really going to balance, for the rest of the session. It came very close to going neutral. Remember, it broke the low here, so we had range extension down, and it looked like it was going to go neutral, and then it turned all the way back around and held sideways. And then finally, gets to neutral the day before that. Excuse me, the day before that was neutral as well. Neutral often begets neutral, and then pulls back to the middle. So far, the profile looks like this. Completely balanced day in a gap, an open that is outside of the range. Looked like it was probably going to consolidate into the end of the session and set us up for blast off maybe in the next session or so. That's what it looked like. And then this news comes out, it drops right here, and then it immediately reverses and just takes off to the upside and comes back into the range of the prior day. So gap canceled. And that's where we stood yesterday. The close was interrupted. We didn't shift the point of control higher. The close was interrupted by the end of the session, so we expect it to drift up on the reopen, which it did. It opened, drifts up, tags this naked point of control from a little bit back. It's an overnight point of control, and then drops and then consolidates for most of the Asian session. And when the Europeans come in, once the Europeans come in with the French GDP growth rate, which missed by 0.3%. It was expected at 0.2%, came in at negative 0.1. Also, retail sales out of Germany disappointed pretty badly. Expected at negative 0.7, came in at negative 3.3. Same with the Italy's GDP growth, expected at plus 0.1, came in at negative 0.3. Just kind of the hits keep coming out of Europe, and it's downhill from there. And where does it move to? It moves right back into that 65 area, gets to 65.75, and then takes its bounce. So we are currently in a double distribution profile on pretty decent volume, 446,000 contracts. Double distribution profile at the 85 down to 65. Two distributions below the mid, below VWAP, right at the point of control. Looks bearish to me on the overnight session. The overnight inventory is somewhat mixed. The volume is negative. The volume delta is negative. A little more aggressive selling than buying. And it puts us in a precarious position because we're sitting inside of this rally point from yesterday, imbalance. What does this lead me to believe? It leads me to believe that today is likely to be a relatively boring day. We do have a fair amount of volume. We do have a drop in the overnight session, but overall, it looks like the job is done. Here's what the order flow looks like. Look at how messy that order flow is. Do you recall a screen having so many little particles everywhere? It just looks like it's probably going to be. Oops. It looks like it's probably going to be a fairly calm session. Of course, Um, forget that idea if we get news. The market just responds so aggressively to news, and frankly, we don't trade the news. That's not really why I mentioned the news. I don't advocate trading the news, but it's important to know what's going on. Um, it's important to know what is going on in terms of what's pushing prices around and how serious it is. It also is important, in my opinion, to know where the scene of the crime is or the point at which the auction is interrupted. So this is what we have in the overnight. And if I squish this down, you'll see that the market, the liquidity is even above and below. We have pushed back into the upper range, into the upper bounds. And so here we are kind of battling this area, and I'm expecting that it's likely to be a two-way challenge in this zone right here. There's a lot going on in this area. I mean, we've put in all-time highs, which aren't that far away. They're about what 50 points away or so. And we are battling right in the composite point of control right now of this region. I'll show you that here in a second. So again, liquidity at 83, around 90 or so. We always have that liquidity at 3,300, and then below at 66 to 62. That's where we stand at the moment. Again, this is ctbookmap.pro. Let's go back to the big picture. So if we look at the push up and the channel that led into the all-time highs, then we have the break lower. We have a gap on Monday. We had a pretty decent sell-off on Friday. We have a gap on Monday, and all we've been doing since Monday is really pushing this channel higher, which we gapped below yesterday, and that's why I was bearish on the first scenario. I was expecting it to push up into 60 and down into 26, taking out this 33 right here, which did not happen. What this means is, oh, the shorts are going to be very, very trapped. And I talked about this in the Convergent Head Trader channel yesterday, that if it gets above that 65, if you're a member, go back and play that audio that I released of the setup of the trade setup for that 65. Once it takes out the 65, it's expected to spike through, and it did, but it did so on news, not just on a technical basis. So overall, it looked like we were going to sit sideways until we took off. And where do we take off to? Look at where we are now. We are trading right at that 79, with the point of control of this entire region sitting at 83 and a half. You can see it right up here. It tells you what the point of control is for this composite, right? So this, I think, is the beginning of a squeeze of the shorts. A lot of bears out there, and continue to fight this trend up. And with the push here, I believe we're likely to squeeze. I do not see the overnight session did a good job of pushing through yesterday's high. Um, Pushing through yesterday's high, and yesterday's high is 92. The prior high is 92.75. We missed by 3 ticks, and then we pushed the overnight session, pushed 97.50 before we came off on the European Open, as I showed you, and we're hovering here on top of the point of control. Remember, 85 is the MCLV, or the overnight LVN, which also represents this MCV So if the market pushes up into this area, I'm going to be watching very, very carefully how it pushes through that low volume node overnight that I showed you earlier, and achieves a higher price. Once it does that, 9750 is vulnerable, so is 3300, and then it's likely to move to the next high volume node up above, which is about 3303, and brings us back there. But today is not expected to be that day. So let's take a look at what's expected for today now that I'm 16 minutes in. I want to remind everybody that it is like Friday, right? Today is like Friday, and we want to hit the like button on YouTube if you see it. Just take a moment to do that. It helps people find this channel. So, what are we expecting for today? Aujourd'hui, heute, today, اليوم, we are likely to see a response into this 83 area. I expect a consolidation, and I'm looking for it to push back. I'm looking for the break into and through that 85 overnight low volume node, and then I'm looking for it to consolidate up here and drift higher into the weekend. This is the assuming no news today, this is the natural progression of the auction following yesterday. Remember, we had an impulse up day. We expect a continuation trade. We expect that high to be taken out in the day session the next day. The secondary is a push into 85, pokes through, and then impulse down, consolidates, and then squeezes down into 65, takes out the overnight low, and then starts to take back some of yesterday's action. I'm looking for a tag of the point of control, and then a bounce back up above the 65. That's scenario 2 for you. So I'm going to let the market set up. I'm not going to trade the first 15 minutes or so. I'm not really interested in what it's doing. I'm watching carefully the action as it's unfolding, but I'm not really looking to take a position early. We'll see how it unfolds, but those are the two main plays, the stock zone areas in this region. Of course, we don't expect a reaction at every stock zone. We expect certain reactions at certain stock zones, depending on who is likely to be in control. But this is what I'm outlining, that we're likely to take out this kind of minor double top here over the last couple of days. Okay, excellent performance. Somebody was doubting that the market can move as wide a range as I was talking about, and it exceeded that yesterday. So we don't know what to expect. Good luck. It is Friday. Good day to be conservative. Good day to pick your battles. And again, the numbers are at 15 minutes after the open, and then a half hour after the open, and then from there the calendar's clear. Good luck today, and I'll catch you on Monday morning. Take care.